Well, hello everyone. Hello everyone. I want to do a really quick sound check right here. I actually had to log in using a completely different computer because my main computer has been updating for like 10 minutes. Usually it only takes about 5 minutes or so for it to update, but right now it's been updating for quite a while, for about 10 minutes. So here we are with my other laptop. Always good to have a backup. So I want to make sure y'all can hear me okay. Please go ahead and give me some thumbs up, sound check. Want to make sure that we are good to go getting this started. I'm not going to share my camera today mainly because, well, there's really nothing exciting to see here since I'm using my laptop. Still here at my office, but I am here on my laptop. But y'all, nothing is going to slow us down. We are going to keep on going and we're going to be updating the new listing to pending ratio. Lots going on. Did y'all get a chance to take a look at my email that I sent out this past weekend? Did y'all take a look at that? You all take a look at the sales, look at that email. There's a lot going on right now in the market, a lot going on in Austin real estate. Pretty eye-opening for us just to see where we are. So let's go ahead and just do a complete market overview right here. We're going to take a look at everything that's happened in the entire month of October. And we're going to take a look at this past week. What has happened this past week? Let me go ahead and just get this Excel going so that we can start updating the new listing to pending ratio. I want to make sure that you all can see my screen okay. I've got a few thumbs up here. Super appreciate it, you all. And let's go ahead and just get the ball rolling. Want to make sure that we make the absolute best use of our time together. Let me rearrange a few screens right here. Wow, my other computer is still updating, which is just ridiculous. Keep in mind, you all, we are going to update the previous week. This is going to be from October 20th all the way through October 27th. And we're going to see if we have to update anything on the pending side of it, anything on the active under contract. And let's go ahead and take a look at this. Give me 1 second. We are going to see if we need to update anything on pending, anything on active under contract. This is going to be for the 6 county area. That's going to be Travis, Williamson, Bastrop, Hayes, Caldwell, along with Burnett counties. And this is going to be from the 20th all the way through the 27th. Pending, we are looking at 368. Looks like we don't have to update anything. I did update this first thing this morning. That's going to be 469 on active under contract, so we don't have to update anything here. We're going to go ahead and take a look at this past week, and that's going to be from the 27th all the way to the 3rd, and we're going to start with active listings. Oh my goodness. Okay, interesting. Really, really interesting. 805. 805 new listings, not active, new listings. 805 new listings already. It's 10:08 in the morning, which means we're going to beat out the previous week at 817. And then on top of that, we've got Halloween weekend this past weekend, which is really unusual that we will beat out the previous week. Very unusual. Well, it's going to be interesting to see how it compares with the previous week. Let's take a look at price increase. We are at 180. Price increase, 180. Let's take a look at price decrease. We are at 1624. Price decrease, 1624. 90%. That's going to be an improvement. That's going to be the best one going all the way back to September 15th, 90%. Let's take a look at back on the market. What are we looking at here back on the market? We are at 150 back on the market. 150, 19% back on the market. There's that pullback over the past 2 weeks. We got up to 24%. 22% the week before that. We're at 19% right now. Let's take a look at active under contract. We are right now active under contract 339. You all get to guess right now. I need 5 guesses going right here. How many properties do you think went pending from October 27th? Melanie is going to start us off at 231, followed by Sonia at 272. Ryan is going to be a little bit more bullish at 305. We've got 3 down. We need 2 more. We've got Charmene at 222. Seems like I've seen that number before. And Violet coming in at a fairly bearish 212. Let me go ahead and click on this number. And oh, Charmene would have won. 224. 224. 224 pending, you all. That's going to start us off at a 0.59. 0.59. A little bit on the slow side of things. No doubt about that. Where's this going to put us when this is all said and done? Well, take a look at last week. We got up to 0.82 ratio, which is last week is the best ratio going all the way back to September 22nd. But this is where we have to start comparing the year over year. So Melanie Price said, what did we start out last week? Well, what we have to do is we have to look at the email that was sent out. So take a look at the email, the Monday recap email that I sent out last week, because that's what I do when I do the recap for the Monday recap. I post the amount that we were at. So let me go ahead and just take a look at that email. I am logging in into a separate system and searching for my Monday recap email. And that ratio last week came in at exactly the same, 0.59. You're absolutely right, Melanie. That ratio did indeed come in at a 0.59. And that's where we are right now. There's that 0.59 ratio. That's where we are right now. And that's exactly where we were last week. Now, let's take a look at the year over year, same exact week, year over year comparison. We have been positive on the new listings going all the way back to October 6th. So here we have 4 weeks in a row where we are positive on new listings. It is 10:12 a.m. and we are already positive 3.1%, meaning we're going to beat the 68. We're going to have about 50 or so transactions or properties come on the market between now and 11:59 p.m. tonight. And that's going to take this number up into the mid 70s. So we're going to beat the past 2 weeks. I mean, the fact that it's 10:12 a.m. and we are already higher than we were last year is really interesting. We've had 70 less price increases, 528 more price drops this year compared to last year. Back on the market, 19 less. 38 less active under contract, but take a look at the pending. We are so far trailing last year on pendings at 234. 234. That's what we are trailing last year on pendings. The week before, we ended at a 6.4% year over year deficit on the number of properties going under contract, active under contract plus pending. Last year, the ratio was 0.97. This year, 0.82. We always have a spike on the ratio the week preceding that Halloween week. And last year, the ratio ended at a 0.88. Now, last week, we started at a 0.59. And right now we're at a 0.82. So I would say that we're going to end somewhere close to that, 0.82. In last year, it was 0.88. Now, let's take a look at the monthly because I went ahead and updated all the monthly information. And we ended the month of October at 14,181 active properties currently on the market. 3,845 new, 646 price increase, 7,788 price drops, a 92%. Out of anything that could have gone up or down, 92% went down. 55%, meaning out of all of the active, what's the percentage of price drops in relation to the active? And that's going to be 55%. The average is 43%. So we are 12 points over average on the relationship between price drops and active. Back on the market, that number also goes up from 737 September to 749 in October, even though the percentage actually went down a little bit to 19%. Now, let's get into the properties under contract. 3,212. The difference between new and under contract got up to 1382. And that's with rates going down. The ratio went down from 0.79 to 0.70 with a better rate environment. Better than June, where the average mortgage rate was 6.82. 6.25 is better than we had October of 2024 when the ratio was 0.79. We're ending the month at a 0.70. As agents continue to update pendings, this is going to go up. It's going to go up to about a 0.73-ish to 0.74. Last year, 0.79. Let's take a look at the year-over-year comparison. New listings up 9.4%. We had 9.4% more new listings this year, October, compared to last year. And that broke the 2-month drop. Here's a funny thing, or not funny, but interesting. We had 2 previous months where we had less new listings enter the market, 104, 123. When you add these 3 months together, we are now on a positive of 103. So this entire year, including October of last year, we're positive 2,844. When you do November all the way to October, we're positive 2,596. So 2,500 more new listings came on the market this year compared to last year. To put things in perspective, that's more active listings that were on the market March of 2022. So we had more listings enter the market, like additional listings enter the market this year than the total number of active listings that were on the market in the entire market, the entire MLS, March of 2022. We had 91 more price increases. We had 1,856 more price drops, 45 more back on the market. Here's the encouraging part, 139 more active under contract, but 277 less pending. So that's going to give us a negative 4.1% on properties under contract. The really eye-opening part is what's happening to the sold. Right now, we are looking at a 16.9% drop year over year on the number of sold properties. When I add all of the sold properties, we are down 631. So on the new side of things, we're up 2596. On the sold, we're down 631. On the active under contract and pending, we are down 306. So we are far exceeding the number of new listings entering the market in relation. It would have been good if we were up on pending, but where it's really fascinating, this is where we have to pay really close attention, is that not only are we trailing the pendings, but even if we were positive on pendings by 500, well, we're still positive on new by 2,200. So we would have to be positive on pendings by 23, 24, 2,500 in order to make any significant dent on the number of active properties. So we're simply not keeping up with the flood of inventory that is entering the market, which is why Melanie said that's how we get to 20,000 by next year. I completely agree with you, Melanie. I'm thinking by March, at the very latest April, we are going to cross that 20,000 active listing. When you take a look at the withdrawn and the expired, together we've had almost 3,000 additional withdrawns and expireds this year compared to last year. The total number of withdrawns and expired this year and last year, or this year, meaning over the past 12 months, right? Over the past 12 months, which includes part of last year. So November all the way through the entire end of October, 17,845. 17,845 withdrawn and expired, which is just amazing to see a number that high. Let me go ahead and save this as a PDF. Just give me 1 second right here. What I have to do is I have to open up a separate little program that I have that will save all of this as a PDF. So this is just going to take me just a few seconds just to get this up and running. And oh, there you can actually see what I'm about to do. I'm going to say export new listing to pending ratio. It's going to grab that new listing to pending ratio. It's going to publish everything. Just have to hit one button. That's all I have to do. And let me go ahead and just save this bad boy. We're going to go ahead and save it. I'm going to save this new listing to pending ratio right here. We're going to go ahead and save it. And now all I have to do is actually publish this. And there we go. Oh, y'all get to see like all the fun stuff. Y'all get to see, like Robert says, how the sausage is made. So that's a little script that I created that updates to our entire website with one click. So now you've got the internal workings of our website right here. New listing to pending ratio, and now you can see that it is all updated. So you've got the latest and greatest new listing to pending ratio. Let us go ahead actually and take a look at some additional charts on this new listing to pending ratio so that we can see how things are faring out, how things are working for us. Let me go to view and do full screen. Want to make sure that you all can see this okay over chat. Go ahead and give me a thumbs up if you can see this without any issues. Want to make sure that you're awake and you can see this. Y'all, I'm in such a good mood today. Can y'all see this okay? Give me a thumbs up. Okay, we got Sonia, thumbs up. We already went over this one. We already went over this one. There's that new listing to pending ratio right there. That's where we are. You can see my little marker, my cursor. We've got the weekly number of new listing to pending, the difference. The difference has actually gone up just a little bit. There's that weekly ratio. Oh, all right. That's where we are right here, you all. Oh my goodness. That's where we are. See that? That's where we are right there. Just slightly under July of 2022, but we know the ratio is going to go up. It's only Monday, the ratio is going to go up. Let's take a look at a few more things. Here's the monthly. Monthly, we're at a 0.7. Month over month, we did experience a drop of 1.4% on active, but we did increase it by 7.8% on new, which is really rare. We are not supposed to see more new listings entering the market October versus September. That is not supposed to happen. It was down by 4.8% last year. It was down 11.9% the year before that. This year, not only is it positive, but it's positive by 7.8%. That is not supposed to statistically happen. We're supposed to see a drawdown on the number of new listings entering the market. And that's why you see an increase on the number of new listings year over year. Here's the difference. When we take everything that is new on the market compared to everything that is pending, we are plus 1382, 1,382. That's going to be the largest October we've had going back to 2008 at 1,807. And there's that 1382 right there. So that's going to be a, what is that? a what 17-year high. So we're looking at a 17-year high on the difference between new and pending. And here's that big gap right there. Look at the difference. We have been fairly decent over the past few months. We had a really big gap in January, which, by the way, that's what I think is going to happen January of 2026. Here's this big, as a matter of fact, even yesterday, talking to this guy at church, and he bought a house in South Carolina. He owns three properties here in the Austin area. He wants to put one of his homes on the market. And he's like, yeah, I'm thinking January. So a lot of people are going to rush into the market come January, and we're going to have this big difference, the over 1,000. We can see, let me go back here. You see, it was 1452. January of 2025, 1452. The same thing is going to happen, in my opinion, this next January. Here's the new listing to pending ratio. We were doing so well in August. We did fairly well in June. So we've had 2 months, June and August. We had a higher new listing to pending ratio this year compared to last year. But we backtracked a little bit in September, came in at a 0.79 versus 0.80, and then a really big drop in the month of October. Statistically, November and December are really good months for the new listing to pending ratio because people tend to pull back on adding listings to the market. When you go back 23 out of the past 25 Decembers, December was a positive month. It tends to be a really positive month. I think we're going to beat out 1.03? As of now, it doesn't look like we are going to beat out simply because new listings are entering the market at an accelerated rate, and then properties going under contract are unfortunately decelerating. And that's where we're going to get the new listing to pending ratio at a 0.7. And unfortunately, it breaks that 3-year trend that we've been experiencing where the ratio year over year was improving. October was higher than October. October 2025 was better than October 2024, which was better than October 2023. And then all of a sudden, we erase all of those gains, and that's where we are right now. And you can see by this one right here. We went from a 0.71 to a 0.77 to a 0.79 and then back to a 0.7. So unfortunately, we did erase 2 years worth of year over year gains that we were experiencing in the month of October, which is very unfortunate. And that's where we are at that 0.70. It is going to improve as agents keep on changing status of their transactions, especially builders, over to pending. This number is going to improve. It's going to settle somewhere around the 0.73 to 0.74-ish. It's not going to beat out 0.79 or 0.77. It will absolutely beat out 0.71. Active listings, this is only for the 6-county area. We're going to review the number of active listings across the entire MLS, but we ended October at 14,181 active listings, and that's going to be a gain of 11.2% year over year. And it's going to be a record high number of active listings for our area. Active per 100,000 people. That's going to be the highest one going all the way back to 2010. We had way more active listings per 100,000 people back in 2005-ish, all the way to 2010 compared to what we're experiencing right now. But we also have less demand, and we're going to go over demand. Let me keep on scrolling. Cumulative new listings. This includes everything. This number is not going to change. So we just hit a record high cumulative new listings entering the market at 45,232. That is a amazing number of new listings entering the market. That's going to be a gain of 5.9%, and we're about 24.3% above average. When you look at new listings entering the market per 100,000 people, here we've got 2 years worth of gain at 149. way less than we were experiencing back in the 2003. Also less than 2007, of course, 8 and 9, but it is the highest number going all the way back to 2021. Cumulative new per 100,000. This is going to be every single thing, 1769, and that's going to put us as the highest one going back to 2019. We're going to skip back on the market. Let's focus on pending. Pending for the month of October, 3212, slightly under last October. When you look at the cumulative pending, slightly under last year. Last year, January through October, we did see a very slight gain of 0.6%. Right now, we're looking at a 1.4% loss on the number of pending properties, cumulative pending properties. Now, let's take a look at pending per 100,000 people. 124. Little bit better than 2022, little bit better than 2023. Unfortunately, that nice positive momentum that we were all hoping for, where October this year would outperform October of last year, unfortunately, it does not look, or that did not happen. We are at 124. When you look at every single property that's ever gone pending from January to October, unfortunately, 2025, cumulative pending, January through October, worst year on record. Unfortunately, worst year on record. So if there's any chart that you really need to sit down with that client of yours, like, hey, how come we're not getting any showings? Like, what's going on? How come my house isn't selling? It's really this one. This is every single pending property from January through October divided by 100,000 population. This is your true apples to apples comparison. 1,480. When we look at the difference of everything that went pending, we've had 7,372 more new listings compared to pending. More new listings compared to pending. And that reversal is amazing. In 1, 2, 3, 4, 5 years, we went from having 13,873 more pendings compared to new to 7,372 more new compared to pending. What a reversal. That is amazing. Active minus pending, we ended October at 10,969. That's going to be the highest October since we began our record here, since we began taking a look at these numbers, January of 2005. Withdrawn plus expired, 1,851. It actually went down. It went down from September, which is really interesting. I was expecting that number would go up. It usually goes up. It's rare that it goes down. Most times it actually goes up. But in this case, it went down a little bit. And let's keep on going. Let's take a look at the cumulative. Total withdrawn and expired 14,466. This is where we're going to get to that 20,000 active listing mark by March or April of last year, where 25% statistically of these expireds and withdrawns are going to re-enter the market, re-engage with the market. And you put that with the inventory that we currently have, along with just the normal number of active listings that are entering the market, we're going to cross that 20,000 active listing mark. I promise you that. This was the shocker. This was the number that I have to admit I was not ready for, which is why I sent you that email this weekend, because I was not ready for this number when I was running the data. I actually really enjoy it when the month changes over and it's the weekend. because the whole family sleeps in, and I also do sleep in. I slept in until 4:45, so I felt just absolutely fantastic. But I pulled all of the closed data and then sent you all this email. So take a look at your email. If you haven't had a chance to take a look at it, this is really important. October 2025 closed with 2366. Now this number is going to go up, but it's not going to like go up to like 3,000. That's not going to happen. The lowest October total in over a decade, a 16.9 year over year from 2846 in 2024. It's a 51.5% decline from the pandemic peak. For context, the area averaged 2840 monthly sales in 2025, so we're 22% below the 10-year average and 24% below the 5-year average. And of course, we've got all of the data that accompanies all of this information. Now, I do appreciate that one of our agents, as a matter of fact, I'm going to go ahead and just brag on her. Aaron Dunnigan is like, goodness gracious, I'm definitely using this with my clients. Thank you for building such an eye-opening message. Well, it's just the data, right? We have to be market data authority is one of our core principles. So we have to be true to the data so that we can explain what's going on for our clients. So here's that month over month, 18.1% drop. And the year over year, 16.9% drop. That's going to be the biggest drop going all the way back to September of 2023. Total sold. Let's go to the total sold per 100,000 population. 83 for the month of October. 83 properties sold per 100,000 people for the month of October. That's an 18.9% drop year over year. Thankfully, that is better than 2010 at 76. Now, this number is going to go up. I do not think that we're going to settle somewhere between like that 86, 87 or so. This number is going to go up. We know that agents are really bad when it comes to updating sold properties, but keep in mind that we're not going to get 1,000 more. So this number is not going to go up to the 93. We would need like 1,000 more sold properties that happen where agents simply forgot. That would be 30%. We're not going to get a 30% increase in sold properties simply because agents were celebrating Halloween instead of putting their properties sold. It's going to go up, but it's not going to go up to 100. That's not going to happen statistically. On the cumulative sold, which is a very, very accurate figure, this number might go up to about the 993 or something like that, or 995. We're at 993 right now. At 993, where we are right now, this is going to put us at the second lowest cumulative sold per 100,000 people, going all the way back to 2010, where we had 976. Y'all, if we're not at the market bottom, we're darn close. We are really, really close to a bottoming out. And then, of course, pricing is going to be the lagging indicator. That will take a little bit more. I do forecast about another 8, 10, possibly 12% pullback on pricing. But here's a few things to keep in mind. We've already had more properties back on the market this year compared to last year. More properties came back on the market this year compared to last year. And we have 2 full months left in the year. Now, we are down by only 4.9% on new listings. We're down by only 2,315 new listings. So we are going to outperform last year dramatically on the number of new listings entering the market. We've already outperformed last year. Can you explain why the data per population is so relevant? Absolutely. I would be happy to. The reason why I like to establish that index, which is population, is our area experienced such a dramatic rise in population over the past 15 years, right? 200,000 people. And I can even pull up the exact figure for you. But we've had, when people say, well, we've had way more sales this year. Like, here's the cumulative sold. And this is a conversation that I've even had with the board or with people. They're like, well, this is nothing like 2008, 2009, because we've had 9,000 more sales this year compared to then. And I'm like, yeah, but we also have 250,000 more people. So when you equalize it and you say, well, how many sales per the number of people living in the area, it gives you a more accurate picture of what is going on. That's why we index it per population, not only on the realtor side, but more so on the population side. It does bring more of like the apples to apples comparison. It's like if you're a grocery store and you're like, well, I sold 10 products one year and I had 10 people going after it versus I sold 10 products and I had 100 people. Though it makes a really big difference. That's why we do that. So we are down 14.13% on active under contract and pending, and we're down 19% on sold. So we are 10 months into the year. 10 months into the year. And what is that? If you divide 10 by, so we're 83% into the year. So we only have 16% left. We're down by 19% on the sold. Does that make sense what I'm saying? And we're underperforming last year. So we've got 16% left of the year and we're down 19% on sold. On pending, we're down 18.4. On cumulative, we're down 14.3. So we're going to end the year a little bit negative on the pending. We're going to end the year positive on new listings. We're already positive on back in the market. We're going to be positive on active under contract. That's going to be the good news. So we're going to be positive, positive, positive. We are going to be negative on pending. We're going to be slightly negative, really low negative, single digit, maybe negative 1%. And then we're going to be negative, I'd say about 2 to 3% on sold. That's going to be our forecast for how the year is going to play out. That's going to be our forecast. So we're at a 0.71 ratio. That's going to stay flat for the entire rest of the year. When do you think we're going to reach 20,000 active? That is a really good segue for us to start taking a look at active, and then we can just do our daily Austin briefing. As a matter of fact, let's do a combination of these two really quick. We are currently right now at 16,041 active listings currently on the market. 16,041 active. We peaked this year, we peaked when? June 30th. The year before, we peaked July. I would say this next year, 2026, we're going to peak. Now, I'm going to put it close to that June. I think it's going to match very closely to 2025. What I think is going to happen is we're going to cross 20,000 active listings by end of March, beginning of April. That's where we're going to cross 20,000 active listings. And then we're going to peak into June. That's what I think is going to happen because look what's already happening. So 2023 into 2024, the number of active listings, let me make this a little bit bigger so you all can see. So we're going to, let me make this a little bit bigger here for you all to see. Give me one second. So we're going to erase all that and let's get a little red thing going. And let me make the line just a little bit bigger for you all. We had a big drop. Let me make the line way bigger for you all so you all can actually see it. We had a nice steep drop right here. 2000 and let me get an actual line for you all. There we go. So we had a fairly steep drop a really steep drop, a softer drop, and now a really soft drop. So you see what's happening over the past 4 years? The number of active listings, the pullback on the number of active listings is slowing down. It's not as steep as it was in 2012, 2013, 2022, 2023, 2024. Little bit similar here, but then it really dropped by much. Right now, we are losing active listings at a slower pace than we did last year and over the past 3-4 years. That's why we're going to reach that 20,000 by the end of March, April, and we're going to have a new peak that's going to happen into June of next year. We went from peaking at 15,000 to then peaking at 18,100. So that's what? 2,500-ish, 2,600 more listings. What are we going to peak this next year? 20,500 into 21,000. That's a good realistic figure on what our peak is going to be for 2026. 59% of all active listings have had at least one price drop. 59%. That number went up a little bit also. 15.5% more active listings. We already went over the new listings. Pending listings, we're back down to 4.1%. Take a look at this. We got down to 2.6% difference, year-over-year difference on pending. Got down to 2.6%, shot back up to 4.1%, which is where we are right now. Cumulative pending, we went over this already. Activity index. Here's the other interesting thing that we have to notice on the activity index, which is fairly unexpected. That 2023, we bottomed out on the activity index in November and we immediately started going up. 2024, we bottomed out middle of August, started going up. 2025, we bottom out in October. But we've been really flat for the most part on the activity index. We just cannot get over 20% on the activity index. And that 20% is a line that matters. We have a vast majority of zip codes, 14 cities under 20%, 12 cities under 15%. I mean, we've got a vast majority. 26 out of the 30 cities that we track are in the contraction, danger zone, crisis, and freeze. When you look at the zip code side of things, we've got 50. 50 out of the 75 zip codes that we track are under 20%. And we've got 2 zip codes, thankfully, in a very strong, demanding, high demand, rising price market, 3.3 and 2.8. I want to remind you, I've got a beautiful new listing coming on the market in the 78728, November 21st. I'm going to get multiple offers on that one. That's what I'm hoping for. We went over the new listing to pending ratio, went over all of this information. Months of inventory, we're at 5.72. That's up 15.6%. Months of inventory, when you look at new construction and resale, absolutely everything. We still have low inventory, which is really fascinating. Now, months of inventory is going to be a lagging market indicator. And as we enter the fourth quarter, months of inventory improves a lot because we do have lower number of active listings on the market, and yet you're dividing that by the number of sold properties that sold over the past 90 days, which includes what? August, September, October-ish or so. It includes that summer activity. Though we always see a drop in months of inventory, right? So we always see, there's the months of inventory. It peaks between mid-June in August And then months of inventory starts going down. Not because demand is increasing, but because you're dividing the previous demand by the existing number of active listings on the market, or you're dividing the active listings on the market based on the historical demand. That's why months of inventory goes down. Year over year in the city of Austin, we're up by 3.4%. Year to date, we're up 14.9%. And here are the number of sold properties for the six-county area, 2154. For the entire MLS, 2366. For the entire MLS, 2366. For our six-county area, 2154. Amazing. Really amazing. 993. We went over this information already. Now, would you believe me if I told you that the average sold price, let me go to market cycle. You're not going to believe me. You're going to think I am lying to you. This is under market cycle. The average sold price for the month of October was the highest on record, including 2022. Let that sink in. I just spent no less than 50 minutes saying how we've got the lowest number of sales on record. We've got the data speaks for itself. I don't have to repeat everything I've said. And yet, the average sold price for October has never been higher at 596,834. 9.1% increase. So someone explain this to me. This is where we have to be obsessed with data. Percentile analysis, insight and statistics, percentile analysis. And this is going to give you the breakdown of where the pricing starts at each percentile. That's going to be the first two pages. Then we're going to have the sold price and the sold price per foot. So we start with active, then we go to sold, and then we go to the year over year change by city, past 30 days compared to the same period. And this is where it gets interesting. This is the entire MLS or the entire data that we get, right? All properties, not based on city or anything like that. This is really interesting because number of sold properties down 25%, everything. The bottom 10th percentile, and a really quick rehash on what this means. Let me go back up here. When you look at the 10 percentile, out of 16,011 properties currently on the market, 10% of those are priced under $274,990. Meaning you've got what? 1,601 properties priced under $274,990. Then what we do is we look at the sold. Hey, what sold over the past 30 days? That number came out to 259. And then we say, let's take this 259 and then let's go back 1 year, take the same period of time, and was that 10 percentile less or more? This year, it was 5.5% less. On the 25th percentile, it was 1.5% less. On the median, the 50th percentile is the median. The median actually went up in price by 0.2%. But look at the 75th and 90th percentile. Well, what's that 90th percentile? That's 1.25 million. Meaning 10%, 1,601 properties are priced at 1.275 million or up. And that number right there, when you look at the sold was 985. That $985,000 is 9.5% higher this year compared to last year. In some of these areas, it's amazing. Bastrop up 12, Buda up 43, Burnett up 25, Dripping up 42. Of course, some of them are negative, but some of them are positive. Dripping Springs, everything is positive. More sold properties, and every percentile is on the positive side. I believe that's going to be the only area. Dripping Springs is the only city in the entire area that has outperformed last year across all price categories, across all price points. Well, that's a little bit of a stat that you can, if you're doing an open house out towards Dripping Springs, well, there you have it. If you've got a listing out there, there you have it. Now we get to zip code. Let's take a look at the zip code side of things. And what do we notice? Which zip codes where everything is outperforming? And by the way, you all, this is a good resource to pick open house areas. We've got 30% less sold, but on the pricing side, outperforming last year. 3.5 outperforming last year. So, really good resource that can help you pick open houses, which areas are outperforming last year versus this year at each different percentile. We've got 5.6 dramatically outperforming last year, doing really well compared to last year. And then, of course, you've got other areas, 7.8, 7.59 underperforming across the board. So that's what's happening. That's why when we look at this average sold price, we say, wow, October was the best October on record, which is amazing. It's really incredible. Now, here's the thing to keep in mind though. We are up by just a little bit. We're up by, less than $3,000, $2,800, 2025 compared to 2022. We're going to have agents, especially builders, that are going to be updating the sold. That number is going to pull back. When it's all said and done, that number is going to settle somewhere around the upper 580s. Still, second best October on record, but there's no way that it's going to stay this high as agents update their sold information. There's no way. As a matter of fact, I'm going to do something really quick just because I'm currently on the MLS right now. I'm going to take a look at all of the sold properties for the month of October. And keep in mind, you all, this is going to be in the 6 county area. And when I pulled that information this morning, it was 25 or 2154, and it's already at 2158. So 4 more properties were labeled as sold from when I pulled up this information this morning to right now. And the price, the average sold price right now is 598,497. Oh, went up. That was 596. So right now it actually went up to 598. But the median went down to 439. Whereas right now the median is 440. So what does that tell us right now? Even more expensive homes are selling. The market right now, the pricing of the market right now is being driven by that top 25th percentile. That's why we call it a bifurcated market. It's really important for us to be able to explain this to our clients. Let's keep on going. The median price down exactly 20%. That right there, this morning it was at 440. It's at 439 right now. And let's take a look at this one. We are up on the average sold price so far this year by only 0.8%. We went over this information. 8 cities have gone up in price year over year on the median sold price. 21 are down, and 1 city is flat. Taylor is exactly the same as 0. The absorption rate, we are ending October at 15.1% absorption rate. That's going to improve a little bit. It's going to go up to about 15.7, which even going up to 15.7 is going to put us at the lowest absorption rate going all the way back to February or January of 2012. January 2012, we were at a 5.2% absorption or 15.2% absorption. We're at 15.1 right now. It's going to improve a little bit. It's not going to cross the 17.7 because we know we had a pullback on pending, we had a pullback on sold. If I were to score the market between 0 and 10, 0, the market is garbage, 10, the market is amazing, we are ending October at a 3.94. The historical average is 6.58. So we're about half of the historical average right now, a pretty significant pullback compared to October of last year at 6.27, which is just a little bit less than the historical average. But when you add in all of the figures that we track, we are ending October at a 3.94. That's going to improve a little bit. It's going to be the lower fours, but still for the month of October, that's going to be very much on the historical low when it comes to what we call the market flow score, which is just a combination of everything. We take a look at the active to sold ratio, the demand for real estate, the market absorption, how days on the market. We look at absolutely everything and we just seasonalize it. We equalize the number and we say, okay, from 0 to 10, what is the market looking like? This is a leading market indicator, and that's where we are right now. And if you were to look at the bond market right now, we are at a 4.117. 4.117. Let me go ahead and log in into our MBS trading platform, mortgage-backed security trading platform right here. And let's take a look at the economic calendar and see what has happened so far here today. Manufacturing PMI, cooler than expected. Tomorrow, we've got a few Fed members. We're not going to get the job opening labor turnover. That's going to be on hold because the government is, of course, still shut down. But we've got a lot going on this week. A lot of Fed members are speaking this week. On Wednesday, we're going to have our mortgage application that comes out. We do have the ADP jobs. This is a private company, so we are going to get this report. They are expecting a positive. Last time it was a negative. Institute of Supply Chain Management is releasing a lot of data. That's going to be available because that's a private entity as opposed to government. We're not going to get anything on jobs. No job numbers. No job numbers on Thursday. Looks like we are going to get some job numbers on Friday. Looks like we will get some job numbers. We're going to get some preliminary inflation data on Friday. So it's going to be a very important week for the bond market. We are up by 4.2 basis points already on the bond market. Where does that put us for rates? The question is, and let's take a look at it. When you go to resources.teamprice.com, you can see, scroll down, go to mortgage rates. This was updated this morning. We're at 6.5% for the conventional 30-year. Everything is over 6%. Even FHA, we were under 6% on FHA on Friday. Unfortunately, because we did cross a repricing line earlier this week, FHA soon followed, and right now we're at 6% on FHA. It is 11:02 right now. Any questions? Any questions, comments, concerns, criticisms, or complaints? Any questions, comments, concerns, criticisms, complaints? Want to remind you all that we do have our contract proficiency. Any new info on leases? A very, very good question. Let's go take a look at leases. I update all the lease information on a daily basis also. So we do have access to all of this information. Take a look at the ratio on leases, Sonia. Really eye-opening. Look at that. 0.64, 0.64, 0.66, 0.69. So we are outperforming last year on the number of new lease listings entering the market, and we are underperforming on pending, and we are underperforming on leased. So that's where we are on leases. And when you look at the pricing, we ended October at 23.15. That's a month over month drop of $81. We ended the median at 2050. That's a month over month drop of $100, which is going to put the pullback on leasing at 9.84% on the average lease price and 10.83% on the median lease price. So right now, we're currently at 7,434 active lease listings on the market. That's going to be by far the highest November on record. And you can see what's happened from 2022 all the way to where we are right now. Just the highest one on record. Really amazing. Highest one on record. Months of inventory, we're at 2.76, and we've got the highest on record. Why do we compare our stats versus 2022 since that was pandemic driven and not sustainable? Well, all I'm doing is taking a look at when the market peaked and the pullback of when the market peaked. So we compare our stats on a monthly basis, on a yearly basis. These two are simply based on, hey, this is when the market peaked, and this is how much of a pullback we've experienced since the market peaked, which is the correction. When people say, well, how much have prices gone down? My follow-up question to the person is, I'll define a start date, like from year over year. I've got that. Over the past 5 years, it's like, okay, well, if you want it over the past 5 years, I've got that. We've got it over the past 5 years. You want a year over year? I've got that. Do you want it over the past 10 years? I've got that. Or do you want it from the peak? Well, I've got that also. So I just compare it to everything. That just happens to be the peak of this market cycle. So therefore, comparing it to the peak of this market cycle is really the question that people are asking. When they say, how much has the market gone down? They're not thinking month over month. They're not thinking year over year. They're thinking from when the market peaked. Good question. Does that answer your question? But so that I don't leave anyone out, I compare it to everything. Whatever they want a comparison, I will give them the comparison. Really easy to do that. And of course, we all know that when we take a look at the value monitor resource that we offer, that's where we compare a bunch of stuff, month over month, year over year, from the peak, from 2022. We just compare it all. Good question. It is 11:07 right now, you all. Any more questions? Questions, comments, concerns, criticisms, or complaints? Any more questions? Going once. Going twice. All right, good stuff, you all. Hit it hard this week. Super excited for the week. If you do have any questions, please feel free to reach out. Super, super proud of you all. Y'all are doing absolutely great. I'm looking at the transactions that y'all are creating, the listings that you're bringing to market. So really proud of you all. Could not be more proud of the team. Excited, even though it is really eye-opening figures for us to be reviewing on a weekly basis. We do it because we owe it to our clients. We have to be truthful and honest, of course, to our clients. They are hiring us to get that property sold. A buyer is hiring us to get the best possible deal on a property, and we've got to rely on the data to make that happen. But you have to look at this as a equipping session and finish out your market reports, do your Novembers, do your December, do the calendar. So be obsessed with reaching out to your people And want to remind you once again, our daily briefing is available every single day. You can click on the daily briefing, you can scroll down, and you can review all this information, send it to your clients. If you do have any questions, please feel free to reach out as always, and I will chat with y'all later.